Welcome, dear traders. You are watching a recap of the Asian session. After a fall in the European and the US stocks yesterday, Asian equity markets were trading sideways. Traders are now looking forward to the results of the Fed, ECB and the Bank of England meetings, and they even ignored China's positive economic reports. For the most part of January, speculators have been looking in profit amid a slowdown in inflation and expectations of smaller rate increases. However, recession fears have not receded yet. This is why traders are rather cautious this week, unwilling to open new positions. Earlier stocks tried to start a rally but failed. Perhaps they could make an attempt to do so again after the Fed meeting. Investors are betting on a 25 basis point rate increase. They have already priced in such a scenario, and for this reason they are likely to pay more attention to Jerome Powell's testimony. And in his speech, they will look for clues about the next steps of the central bank on attainment soaring inflation. A slowdown in inflation may lead to a possible rate cut by the end of the year. However, before the blackout period, several Fed policymakers noted that rates would be raised until inflation reaches the 2% target. Foreign oil prices were another negative factor for Asian stocks. Apart from that, the International Monetary Fund published its economic outlook for 2023. In October last year, the IMF projected a drop in GDP to 2.7 from 3.4%. 3 months later, it upgraded the forecast. Now the reading totals 2.9%. The fund improved its outlook amid the surprisingly steady demand in the US and Europe, lower energy prices and the reopening of the Chinese economy. However, the IMF also warned that the global economy could easily slide into recession. The US dollar index rose slightly on the IMF warnings. An increase in loan positions on the US currency at the end of the month led to a decline in its rivals. Judging by the technical indicators, a rally of its rivals is losing steam. On Tuesday morning, the greenback was trading sluggishly in the narrow range of 102.10 and 102.40. It's likely to extend its decline for the fourth consecutive week due to expectations of a less hawkish rate increase. Besides, the ECB and the Bank of England are projected to undertake aggressive rate hikes on Thursday. The euro, the main rival in the currency basket, has already approached a 9-month high. While the euro and the pound sterling are climbing, the US dollar is gradually losing the pips it gained last year. In the Asian session, it was hovering at 102.20. The Australian and the New Zealand dollar are likely to score big monthly gains. The yen could also show positive results. However, earlier it rose sharply amid the comments of the Bank of Japan officials about the policy reversal. In the Asian session, it moved to the consolidation phase. The dollar-yen pair was trading in the price corridor of 130.10, 130.50 due to the mixed market sentiment. Besides, US government yields are trapped in a narrow range. Today, caution's optimism is often followed by fears, and the yen managed to appreciate to 130.35. The pair has been climbing for the third week in a row. Strong economic reports are fueling hopes for a shift to a hawkish stance by the Bank of Japan. It facilitates further growth of the yen. To cement the upward movement, the pair needs to consolidate above 130.40. The Aussie sank to 0.7007. Commodity currencies are sensitive to external factors, so they are facing bearish pressure as investors are looking in profits before the Fed meeting. Another reason for the decline was a downbeat economic report. Consumer prices in Australia jumped to 7.8% versus the previous reading of 7.3%, and this may affect the Reserve Bank of Australia's rate decision, which will be announced next week. However, the futures market shows that traders are betting on a smaller rate increase of 25 basis points. Given the risk aversion and foreign oil prices, the Aussie was trading in the downward channel of 0.7004 and 0.7066 during the Asian session. Overall, it grew by 3.5% in January. That's all for now. Hit the subscribe button and keep close tabs on the market developments. See you soon.